A very warm welcome to everyone on yet another live show. I'm your host, Olivia Higgins, and hi, everyone. A warm welcome to you. You're on another live webinar show. I'm your host, Olivia Higgins. We're live here from a Moomoo Singapore office. And I have an exciting guest for you today because it's all about application today and how you can use the Moomoo app. Now, while we wait for a few more people to join us, here's a video crafted and created just for you. Enjoy. Welcome back, everyone, especially those who just joined in. Anywhere you are you in app or YouTube or Facebook, welcome to the show. Once again, you're here with me this afternoon. I'm Olivia Higgins. And for today's show, remember, it's all about education, learning as much as you can. So we're here to just guide you for educational purposes only. So make sure that you take those notes. And if you have your app with you today, do follow through, because most of this webinar is really about application today on how you can use the Moomoo app. And of course, to network with the community, because today is also about connecting and engaging with the community. So use the chat box to engage, to ask your questions, and also to chat with other community members, or if you have any questions for our expert today. So be ready, all of you. Now, as we proceed on to the second half of the year, we're always looking for new ways how we can re-strategize and also relook at our fundamentals. Or if you're a new investor in this space, it's also learning and relearning the basics of what you need in your strategy. So as we mentioned before, use this as an opportunity to leverage and also look into the other potential opportunities going into the second half of 2023. Today with me, you've seen him before on our online and offline events, and of course, you've seen him on the Beansprout Move community. Let's welcome CEO and founder of Beansprout, Gerald Wong, everyone. Hi, Gerald. Welcome back.
Hi, Olivia. Hi, everyone. Thanks for joining us today.
Thank you, Gerald. So those people who don't know you, maybe you can give us a brief intro about yourself. And today is about application. So maybe about the topic we're diving into today.
Sure. So my name is Gerald. I'm the founder and CEO of Beansprout. You can find us in the Moomoo community under the name Beansprout. We've been posting regularly there, so do keep a lookout for the latest market updates. What we provide will be investment insights to be able to help you make better financial decisions. So that is something that we hope to be able to share with you during the session today.
Perfect. So I know you've got some insights to share with us. Looking forward to that before we go into the live application demo. The floor is yours, Gerald.
Sure. So let me pull up my screen. Give me 1 second. If you can transition to the slides. Okay, so what we will start with, if we can start with slide number 2 of the presentation deck. Okay, we shared earlier about what Beansprout is. Effectively, what we want to be able to do is to be able to guide you towards better financial decisions. So that is why we are here today. If you find some of what we have shared useful, do continue to follow us in the Moomoo community, as well as our other social media. If I move on to the next slide, slide number 3, today's sharing is for education purposes only, and none of what is shared today should be seen to be a recommendation to be buying any particular stock or equity. Okay, so before I go into the app demo, I'll just do a quick recap about what has happened in the first half of the year, and using that to be able to lead in to think about what we can do using the Moomoo app to help us with our investment analysis. So if I move to slide number 5, what we effectively do is to look at how the stock market has actually performed in the first few months of the year. And effectively, what we have seen is a very strong divergence between the different markets. Okay, so if I look at something that is close to home, the Straits Times Index is down slightly in the first 5 months of the year. But then if we're to look at the US market, say the Nasdaq, which is effectively what a lot of the tech stocks would be in, we have seen actually it going into a bull market with more than a 20% increase. The S&P 500 has also done well year to date. So we are looking at about 9% increase in the first 5 months of the year. So effectively, what this means is that despite all the concerns about inflation, the Fed raising interest rates, despite the concerns about potentially the higher interest rates impacting investment returns, we have also continued to see a lot of opportunities in the market, as reflected with the strong performance of the Nasdaq over the first few months of this year. If I go to the next slide, slide number 6, what we see here is that the markets have actually been very volatile, and that once again presents opportunities for investors who are able to understand the investment horizon well and what are the different opportunities that come through together with it. Okay, and that effectively would lead on to what I will share later around how we can potentially do some of this analysis either on the app or via other means. If I go to the next slide, slide number 8, effectively what we see here is that really what has really been driving a lot of concern amongst investors is the continuous hike in interest rates by the US Fed, because of the very high inflation that we've seen over the past few years. So the Fed has effectively hiked interest rates close to 10 times since 2022. And only in the most recent meeting in June did we actually see a pause in the Fed interest rate hikes. What this also means is that we are now in a fairly high interest rate environment, and that also presents other opportunities for us as investors, which is something that I'll share later as well. If we were to look at the interest rates in the US now, we are effectively close to 5% Fed fund rate, given the very sharp interest rate increase that we have seen over the past 12 months. And that has really led to some concerns about whether this will drive a recession, and also likewise the volatility and divergence in the market that we have seen over the past few months. If I go to the next slide, slide number 10, how this has actually translated into whether or not we are in a recession or not. I think we can look at a few indicators around where the global GDP growth is for 2023 and likewise into 2024. If we were to look at the global economy, we are looking at a pace of growth of about 2.8% this year. But there is actually a very wide divergence between the advanced economies as well as the emerging markets. If we were to look at the advanced economies, and this will include countries such as the US, as well as regions such as in the EU, then the GDP growth is just expected to be at about 1.3% this year. But on the other hand, if we were to look at emerging markets, then the growth is actually significantly higher at about 4%. So once again, this has also helped to explain the very divergent returns that we have seen across markets so far this year. And that actually leads on to why we need to be performing our own due diligence as well as investment analysis in our investment process. If I go to the next slide, slide number 11, if I were to drill down in the US, and this is a question that we get very often, are we already in a recession? What we see here is that the US GDP has actually slowed down very significantly from 3% in third quarter last year, 2.6% in the fourth quarter, and then in the most recent quarter, just at about 1 to 2%. So definitely we are seeing some signs of slowing down, but we are not in a recession environment as yet. Okay, so while the economic outlook might be uncertain, we are not in that kind of situation where the economic situation is very bad, people are losing their jobs, unemployment rate is very high, and as a result, we have still continued to see decent returns for the stock market. If you go to the next slide, slide number 12, looking closer to home in Singapore, we have likewise seen this slowdown in GDP growth. In the first quarter of this year, the economy contracted by 0.4% compared to the previous quarter. So that's actually led to very significant concerns about whether Singapore will even go into a recession before the US actually does so. Okay, so going back to one of the slides that I shared earlier around why the SCI has been down year to date, while the US market has actually done fairly well. Actually, if you were to look at, say, the GDP growth of Singapore versus the US, Singapore actually already saw a GDP decline in the first quarter of this year, while the US still managed to see growth of about 2%. Okay, so Singapore is definitely in a slower pace of growth compared to the US, and that actually leads to our discussion around whether we can think about different investment opportunities given the investment climate that we shared earlier. So I'll use that to go to my next discussion around what are the different investment strategies that we can effectively undertake given the macro backdrop that we discussed earlier. So I'll break it down into three key strategies. I shared earlier that we have seen a very quick pace of interest rate hike by the US Central Bank. And the first thing that we can think about is how we can maximize our interest income given the very accelerated pace of interest rate hikes that we have seen over the past 12 months. Okay, so that is the first strategy. The second strategy is to think about how we can grow our dividend income. We have seen that the economic outlook is uncertain. We have some economies that are growing faster than the rest. There's been divergent performance across the different markets. So for some investors that want to be earning a good dividend income while waiting out the recession to be over, or for there to be greater signs of what's going to happen to the global economy next, we can effectively look for dividend stocks as a way to earn some recurring income while waiting out for this recovery to come through. So this is something that I'll share later as well in terms of how we can potentially look for dividend ideas if there's something that you want to be exploring. Last but not least, while we are looking at some economic slowdown at this point in time, there are still different structural ideas that we can potentially look at. And these are ideas that are looking 5 years, 10 years down the road to see how the world will be different compared to where we are currently. Okay, so we can think about some of these structural trends and how we can start to position to benefit from these trends. If I go on to the next slide, I'll go into some of this in more detail. So for interest income, effectively, there are a few different ways that we can be thinking about how we can maximize our interest income. What many of you might be familiar with would be, say, putting your money in a savings account, putting your money in a fixed deposit account. So those are relatively low-risk ways of earning a good interest income. More recently, we have started to see Singaporeans investing in government bonds. So T-bills, Singapore savings bonds, those are things that a lot of our community members ask us about as well. But there's something else that has also generated a lot of interest by investors, and this would be money market funds. So what these money market funds effectively do would be, rather than you deciding to invest in the T-bills yourself, rather than you trying to find which bank actually offers the best deposit rate, you can potentially consider putting your money in a money market fund. And what this money market fund would do is that there's a professional fund manager that will deploy your funds accordingly in various safe investment options. This can be putting them in different bank accounts that earn the highest interest rate, or effectively investing in some of these treasury bills so that you don't have to do the application process yourself. So money market funds have become one of the ways that investors have started to explore to be able to earn also a high interest income. Okay, so there are different ways that we want to be exploring, even if we are just looking at how we can make our savings work harder for us, given the high inflation environment. Next, we go on to this strategy around dividend income, which is on slide number 15. So as many of you might be aware, Singapore market offers a good dividend yield. If I were to look at the STI index, you're looking at the dividend yield of about 4 to 5%. Okay, if I were to look at, say, Singapore REITs, which is something that many investors have taken an interest in, then what we see here is that the average of the REITs that are listed in Singapore actually give an even higher dividend yield. Okay, so if I were to compare this dividend yield versus what you're able to get on, say, the MAS benchmark government bond, or versus the inflation rate, then you're potentially able to earn a higher dividend yield on some of these REITs versus what you're able to earn versus the government bond. Okay, so one of the things that we can potentially look at is how we are able to identify some of these dividend stocks. Last but not least would be structural themes. And I will go to the next slide, slide number 16. You probably heard some of these structural trends that generated a lot of interest over the past 12 months or even the last few months. So it can be something like how artificial intelligence can impact our day-to-day lives, whether it will take away our jobs, which are the stocks that are exposed to AI. I think those are often topics that have been brought up for discussion. Apart from AI, we have also seen the interest in electric vehicle names. because of the view that we are going to be moving towards cleaner energy, and electric vehicles might be a way forward so that we are less dependent on the conventional vehicles. And of course, we also have the broader theme around green energy, given that there's all the concerns around climate change, as well as hitting the 2050 target to be able to bring down our carbon emissions. So with that, I've effectively shared some of the different investment strategies that we can potentially explore. And hopefully that will provide you with a backdrop around how we can think about positioning in the second half of this year and how we can start looking for some of these ideas. So with that, I'll hand back to you, Olivia, to see whether we can have a further discussion on the practical aspects of this concept that we have shared previously.
Great stuff, Gerald. I think it's really important you mentioned the word practical right there, because you shared the key insights. Of course, you covered how you can grow your investments and also set the context of today before we go into the application process. Now, we do want to find out how we can apply growing your investments within what you shared, the three subsectors of interest income, dividend income, and also structural trends, which is, what shapes the markets at the moment and where we're heading towards potentially for the second half of the year. So, with this, I would like to know, Gerald, would you care to share your screen so that we can follow through with the application of what we just learned?
Sure. So what I will do next is to bring on the Moomoo app. This is the mobile version. And effectively, what I'll do over the next 15 to 20 minutes is to use the introduction that I shared earlier and be able to use that to share how we can potentially look at some of these opportunities via the app. Okay.
Absolutely. So everyone out there listening in, and I know a lot of people just dropped in as well, do have your app ready with you. If you got your phone with you or even just the desktop, of course, it will be different from today's application because the phone, the mobile version does have particular components that the desktop version doesn't have. So for the maximization of your learning experience today, do follow through on your phone app if you have it with you, okay? Because today is really about learning as much as you can. Now, Gerald, just to dive in for the first part of the application, what are some core tools that they can use or indicators that they can start off with navigating the mobile app?
Yeah, so something that I always start with would be in the Markets tab. Because this tab in itself has several tools that would always be great to start with if you are looking to explore different ideas, or if you just want to be able to explore the different options that are available. So if I go to the Markets tab, which is where I am now on the mobile version of the app, what you see here would be, number one, the ability to explore. You've got the section on the earnings report, and you've got the featured list. What I'll do is I'll go through some of the top selection. And the heat map is always something that is helpful to get a quick overview around what is happening in the markets today. Okay, so I shared earlier around how there's been divergence in terms of the performance across different markets, across different sectors. And that's something that you can see very clearly from this heat map. If I were to use the US as an example, this would effectively tell you where are the different moving parts and what is driving the performance of the major indices. So if I were to start with the US as an example, what we see here is that, the semiconductor sector actually did very well last night with a gain of close to 1%. And that is really a reflection of some of the excitement that we have seen coming through from the AI-related theme that was shared earlier. If we were to continue to scroll down, what we see is that, maybe the consumer sector might not have done as well in terms of the performance last night. There might be concerns about whether or not there will be a slowdown in consumer spending, given the continued rise in interest rates that is dragging down the performance of some of these consumer stocks. If I next go to Singapore, given that the Singapore stock market just closed for today, we can get a very quick overview around which sector has performed better today. And what we see here is that the banks have lost slightly today, down about 0.06%. And what has really stood out in terms of performance would be the REITs. Okay, so we saw the REITs actually gaining by 0.24%. Real estate is down about 0.22%. This might be because of the news headlines that came through overnight about there being first ever decline in the private residential prices in the most recent quarter based on the URA flash estimates. So that is something that we have seen actually maybe dampening the sentiment towards the property developer stocks and hence effectively impacting the performance. Okay, I will try to bring back my screen. Give me 1 second.
Yeah, sure. I think just to summarize what you just mentioned, you brought up the heat map function, which is really great because personally, I use that to really have a macro overview of what is changing within the industry. And I think what is important as well is the fact that that's in real time. So it actually changes and the proportion also moves according to the market changes and revelations. So definitely use that tool for yourselves to really have that macro perspective of industries and also customization components that you can tailor according to your own investment needs at that time. Yeah, so Gerald, would you like to share more on the other indicators related to this?
Yep. So I wish the Singapore market was still open at this point in time, and then we can show how that heat map actually changes together with the changes in the market performance. But I think you raise a very good point that it provides us with a very good overview around what sector is moving in the market today. So I shared earlier that one of the key strategies that we can adopt is to look at dividend stocks as a way to be able to allow us to earn a dividend income while the recession is being waited out, while we wait for better signs of an improvement in the economy. So that's where I go to this featured list segment. Once again, within the markets tab of the Moomoo app. And what this featured list is that it would provide you with some ideas based on the different ideas that have been shortlisted. So if I'm looking at high dividend, there are effectively 5 names here that are shortlisted as potential names that we can explore if I'm interested in the high dividend theme. And if I want to look at some other themes, you've got hit list, short sales, 5-minute movers. So effectively allowing you to understand what are some of these different stocks that would fall within the different categories that we have identified. So given that we mentioned earlier that, dividend stocks might be something that might be a potential opportunity, we can just use this list as a way to identify some of the high dividend stocks that we can explore further into. So if I were to click into the one that is highest on the list, Ocean Palm, I may not have heard of this name previously. And by clicking into the name, I'll be able to see how the stock has actually performed. We'll be able to see different indicators from a technical perspective. But what I wanted to really go into would be the company's financials. So that is something that is available to you as well when you click onto the company section within the individual company page. And effectively what you're able to see here would be a quick profile of what this company actually does. So I may not have heard of Ocean Power previously, but I now know that it is in the marine shipping space, and effectively it provides shipping transportation services. So that is effectively a quick overview of what the company does. Next, I'll take a quick look at the financials. So revenue of about 4 million, but effectively the company has just been able to make a profit of about 88K, which is down about 80% year on year. Looking further down the list, 100% of its revenue coming through from dry bulk vessels. So I can use this to be able to understand whether or not I want to be owning a stock that is exposed towards the dry bulk segment and maybe being able to offer me a dividend yield through its ownership of these dry bulk vessels. Okay, so that is one way that we can effectively screen for high dividend stocks using what we see here within the markets. If we want to look for other ways to be, say, I want to look at dividend ideas within the Sing market. So this is where I'll go to the SG tab on the top here. So once again, STI down about 0.1% today. And there is actually this special category that is on REITs. I know many of you are actually interested in REITs as a way to be able to earn some dividend income. So what I'll do is I'll click on the REITs section, and here it will display to me all the different REITs that are listed in Singapore. And effectively, what this will allow me to do is to look at different REITs and how they're performed today. If I want to drill down to one particular REIT, and I will go into Keppel DC REIT, given that that is a name that many within the Beansprout community often ask us about. It was recently removed from the STI, so we can effectively get a quick view around Keppel DC REIT by clicking into the stock. So what we see here is that the dividend yield is actually at about 4% over the last 12 months. And this is actually above the rate that you're able to earn on, say, maybe the Singapore government bond. Okay, so using this, I can effectively do further analysis of Keppel DC REIT. For example, I'm interested in this 4% dividend yield that Keppel DC REIT actually offers. And I want to understand whether this dividend yield actually sustainable. So once again, I look at the company section of the page. And then what I see here is that, Keppel DC REIT is involved primarily in investing in data centers. And I will try to get a better understanding around whether this is something that I want to get exposure towards. And when I click on financials, I'll be able to get a better picture around how the company has performed over the past few quarters. So what we see here is that Keppel DC REIT has been able to grow its revenue, but its net income came down, maybe because of the fact that interest rates went up. So it has to actually pay a higher interest expense, which led to a lower net income, even though the revenue has been going up. We are able to see the revenue breakdown, whether it's by business or by region. If I look at the breakdown by region, then what we see here is that the bulk of the data centers that Keppel DC REIT owns will be in Singapore. And that may provide us with some comfort because of the fact that there hasn't been any new data center that has been set up in the Singapore market. So we might be seeing more limited supply of data centers. And with that, hopefully Keppel DC REIT is able to earn a higher rent from the data center that it owns. If we drill further down, we are able to look at some of the financial indicators. So, for example, we can see how is its free cash flow generation, whether it's got very significant gearing levels. So those are the different things that we can effectively just do a quick check using the visualization that is available to give us the comfort around whether we want to be buying into this particular data center REIT. Okay, so with that, I've covered the portion around dividend income. And what I will do is I'll go back to the previous screen, once again going back into the Explore tab, because what we want to look at next will be the opportunities that come through from maybe structural trends and different thematics that we are looking at. So what I will do is I will scroll further down. What you see here is like institutional tracking. If you want to follow what Berkshire Hathaway is buying or selling, what ARK Investment is actually buying or selling, you can effectively look at what they have done and be able to pick up stock ideas from there. But what I want to effectively do is to look at different investment ideas that can be presented, say, using opportunities that might be available. So if I were to go to say industrial chain, okay. So previously I shared a bit about the different structural trends that we can think about. So recently a lot of people have been talking about ChatGPT. We shared EV as one of the structural trends that many people have been looking at. So if I go into the EV industrial chain, what this would effectively show me would be how the entire value chain within EVs could potentially work. Okay, so whether you're looking at upstream companies, companies that are involved in lithium production, midstream, which is really companies that are involved in, say, maybe the production of the batteries, or if I look at downstream, I look at passenger vehicles, companies that are involved in selling these EVs, I can effectively think about how I want to be exposed across the entire value chain. So if I start with a passenger vehicle, what this shows me would be a list of stocks that are exposed towards the downstream portion of the EV value chain. So some of you might already be familiar with Tesla. But apart from Tesla, if I want to understand what are some of the other EV companies that can be interesting, this list will effectively be shown to me here. And then I may be interested in, say, BYD, okay? And I'm able to click on into BYD to then explore further into whether this might be a stock that I want to be investing in. I can effectively think that, oh, maybe EV manufacturers will still face price pressure at this point in time. Many of them are still having price cuts, but what I want to be exposed to will be in the upstream segment, because I believe that there are not a lot of lithium producers globally, but I have no idea what are some of the lithium companies that are available for me to invest in. I may know Tesla very well, but when Elon Musk shares about whether it might be worthwhile having a greater share in lithium production, I may not know what are some of these lithium companies. So once again, I can click on this lithium, and what I see here will be different stocks that are exposed to the lithium production, and will be able to start shortlisting the stocks from this list. Okay, so this effectively is a way that we can potentially think about how we want to be exposed towards the different structural themes that we have identified, using this industrial chain to be able to identify the different themes that we are wanting to get exposure towards. So not only do we have like ChatGPT, EV, if I scroll further down the list, I've got Apple's industrial chain as well. If I want to know which companies will benefit after Apple recently breached the 3 trillion market cap mark, this is something that I can start to explore. If I want to explore something that is maybe related to petroleum, because of the fact that there is greater geopolitical risk now, I'm not sure around what is going to happen in Russia, then I can look at the petroleum thematic and be able to identify stock ideas from here. The last one that I really wanted to show is really on the way to be able to earn a higher interest income, because I shared some of the strategies earlier, whether is it earning a dividend income, whether looking at longer term structural trends. One other way is to think about how we are able to earn a interest income, and that would allow me to jump to this tab that is called funds. So one of the ways that we can think about having a higher interest income, I shared money market funds earlier, and that is something that we can potentially look at in terms of what is the latest return for some of these money market funds that are available. So for example, if I look at the Cash Plus account, you've got 2 money market funds that are listed here. One is the CSOP USD money market fund with a 7-day average yield of about 4.7%. And if I was to look at the Sing Dollar Cash Fund, that is at 3.9%. Okay, so if I want to be thinking about, okay, I want to explore the Sing Dollar option, I'll click onto this fund. And what you see here is a further analysis around how the fund has actually performed over a 1-year period, a 6-month period. to give me certainty that this is actually maybe a safe investment that I can potentially consider. I can look at comments, and this once again where you'll sometimes see comments put out by Beansprout. So do remember to follow our account because we'll share different insights that we have based on the data analysis that we have done with different users who are on the app. What we can also explore would be, if I'm not familiar with what this money market fund actually does, I'll go to the summary tab and be able to find out here about what is really this money market fund. So what we see here is that, the inception date is in 2009. So quite a long period of existence. The fund has been around for more than 15 years. We can see who the fund manager is. And if you want, we can find out further by looking at the fund fact sheet or even dive deeper into the fund prospectus. So all of this is actually available to you if you want to understand more about this fund and how it can potentially help to generate an interest income on some of your spare savings. So with that, I would have covered the 3 potential ways that we can look at whether is it dividend income, long-term structural themes, or how to earn a higher interest income. With that, I'll pass it back to you, Olivia, for any questions that might be available.
Perfect. Thank you for outlining the key functions related to your presentation earlier, especially the one towards the end when you actually talked about not just the money market funds, but also trying to figure out the navigation within structural trends, because we're getting a lot of questions on that already. I like the component about the industrial chain component where you talked about going into the specific value chains and looking at the specific sectors and how you can do that on the Moomoo app. Very comprehensive. So I've got some questions right here. So I would like to go into the live Q&A. I know we have a lot of questions coming in also on Facebook this time from our audience. So thank you for engaging. Keep those questions coming. But let's go into the first question regarding the heat map. So someone would like to know on a daily basis, what would you say is that component for the heat map as part of a strategy? Like how often do you use it? Do you use it monthly or yearly? And how often do you check in to review what has changed for that particular tool?
Yeah, so I think for the heat map, it really depends on individual investors. I think it's great that we have a tool that provides us with a pictorial representation in a very easy to understand manner. But in terms of how much we want to be using this, I think it really depends on whether you are a day trader, where you effectively check the markets on a daily basis, in which this would be helpful for me to have a quick overview around, say, today, saving banks are down, but the REITs are up. And what do I want to be thinking about in terms of investment opportunities that may come up tomorrow? I may be a longer-term investor, but this will effectively allow me to have a good representation around what are some of the well-performing stocks and what are some of the stocks that have not done as well. And whether I want to take a contrarian view that, okay, maybe some of these sectors have gone down so much, it may provide an opportunity because their valuation is now very attractive, or because I feel that, okay, maybe other investors are looking at a particular sector. I want to understand why other investors are looking at this particular sector. Is there something that I'm missing out? This can potentially be a starting point for me to do the analysis as well.
Thank you for that. Next question is really on a personal basis. So Gerald, for yourself, because they're looking at particular stocks at the moment and how to re-strategize. Now, other than the structural trends that you described, what are the indicators that would be useful for an active investor in this space? You can tap on what you just shared, or you could maybe add a little bit more in terms of insights from a personal standpoint.
Yeah, so I think for us, it is important to be aware of what we are investing into. And I think that is something that we continuously remind people in the Beansprout community, something that we constantly share in terms of the framework around how we can go about analyzing banks, how we can choose the best REIT for our portfolio. And I think that is something that we can practice when we are performing our investment analysis. So I will use an example around the bank, since that is something that many people always ask us about. Like, the banks have come down. Is it time to look at the banks? Do the banks give us a good dividend income? I guess because they are always all around us, we are familiar with the Singapore banks in our day-to-day lives. So that is something that we can dive deeper into. So using this heat map as a starting point, I'll tap into banks. Okay. So what you see here will be the performance of the banks. You have got, say, DBS. So I will take a deeper look into DBS, since it is a name that many of us here are actually familiar with. What we see here as a very quick overview is that, okay, the share price now is $31. It's come down from its 52-week high of $35. And maybe just slightly above the 52-week low of $27. So somewhere in between the 52-week low and 52-week high. But what may be of interest to investors is that if I were to look at the dividend yield, the dividend yield of DBS, based on what we see on the app, which is something that I'll start to pull up now, is that the dividend yield for DBS might be something that investors are interested in. And that's something that we are able to see on the screen. So in the last 12 months, based on the historical dividend yield, it'll be about 4.77%. Okay. So then the next question that you might have is, is DBS able to sustain this dividend? Because there are a lot of concerns about recession. So that is something that we can do further analysis by looking at the company's financials. So once again, I'll go into the company tab. Okay. So you will be able to see what the valuation of DBS is, current PE of about 7 times. You can see who are its key shareholders. Temasek continues to have a 29% stake in DBS. That's something that we get a lot of questions on after the recent news report about Temasek selling its stake in Singapore Airlines, whether Temasek has holdings in other Singapore listed companies. So you're able to get that using this function, which shows you the key shareholders of DBS. Okay, you're able to see the corporate action. So DBS paid out a dividend of 42 cents in May this year. So that really provides the basis for the very high dividend yield that we see. Next, I'll go into the financials tab. And what you see here is that DBS has been able to report very strong growth in revenue as well as net profit over the past 12 months. Okay, if I go further down, and what I want to bring you to would be the earnings, revenue, as well as operating profit. So what you see here is that if I were to look at the earnings, which is reflected in the EPS, DBS reported EPS of 1.005 in the first quarter of the year, and that is above what the analysts actually predicted. Okay, we can likewise look at revenue, and likewise what we see is that DBS has been able to report a higher revenue versus what the market was expecting. Okay, so for those who track the earnings season very closely, want to get an understanding of whether companies have missed or beat market expectations, this is one of the ways that we can potentially look at. Of course, the other way is to go into the comment section, where if there are relevant updates around whether a company has reported results, once again, do follow our account, Beansprout, where you'll be able to find recent updates around some of these recent developments by the companies and how that has moved the share price of different companies. Okay, we can do further data to look at the financial indicators. So that provides us with the quick view around the EPS. And what we see here is that the company's earnings has been going up. If I were to look at, say, the returns, the company generated a very healthy return on equity of close to 14% in the last fiscal year, So that might provide us with some comfort that, oh, actually, DBS is able to earn a good return on its equity, and that's enabled it to pay out a relatively good dividend yield.
Mm-hmm. Thank you for sharing that last part, especially because we had some questions on that. So you really hit the nail for that one. So for the next point, you had some questions from your own communities, right? Is there anything in particular that you commonly get right now with market uncertainty from the Moo community on the Beansprout page? And also, how can you access the community function for Beansprout and also all the other contents for community?
Okay, so I've shared the chart function where you're able to see the price movement. I shared some of the tools relating to the company. So you're able to do the financial analysis using this page. I've not shared two other tabs that we see here. One is the news, where you're able to see the most recent news relating to this stock that you might be interested in. And the other one is really the comments, okay? So this is where you will see the Beansprout comments actually appearing. If you have something to say about DBS or the REITs, you'll find it in this section. You'll be able to see at the top some analysis of whether the Moo community is generally positive or negative on this particular stock. And this is really where you're able to access more content relating to individual stocks, and this will all be shared by the Moo community. To be able to find us, where you will need to go to would be effectively within the community section. You'll be able to explore the different ideas. So this under Discover, you see Moo here. And if you actually now go to look for Beansprout, hopefully you'll be able to find us and follow our account such that you'll be able to get updates from us on a regular basis.
Thank you for
Within
that.
the community section,
This particular
you'll be able
webinar right
to
now, you've got it
explore
right up.
the different ideas. So this under Discover here. And if you actually now go to look for
Excellent. So thank you for sharing the community functions and also how you can be a part of the discussions, because at the end of the day, the Moomoo app is really not just the technical tools, the indicators to help you get where you want to be in terms of your investment needs, but also it's about engaging the community. It's doing it together in our self-directed journey in investments. Now, Gerald, I've got some questions about the market level data. So I will answer this myself because we've got our product specialists DMing at the moment. So of course, for the level 2 market data, it's only for the US market at the moment if you want it for free. But at the end of the day, for the industrial chain component, which is actually really, really important, and what Gerald mentioned, I still have a lot of questions on structural trends. Now, for this component, you asked, is it limited to only the US market for this app function? Yes, at the moment, it's only limited to the US. So I hope that answers your question related to the structural trends. Now, Gerald, is there anything you'd like to wrap up with for the technical indicators or anything related to the community functions on our Moomoo app?
Yeah, so I managed to bring up the Beansprout page. Do follow our account because what you'll be able to get here will be updates relating to some of the latest movement in the share price. So, for example, I shared earlier about Temasek selling its stake in SIA, the latest analysis, what this means for the stock. Last week, we saw very significant movement in the share price of Yangzijiang Shipbuilding. So we shared our thoughts here as well. We also have daily market updates in terms of major share price movements, as well as how the different macro developments are effectively impacting the share price. So do follow our page, Beansprout, and we'll continue to be sharing some of these insights with the Moo community.
Perfect. I think that's excellent. And of course, the people who just joined in and want to see what you missed out from the first half, of course, Gerald had his own insights and presentation at the beginning, and then we went on to the application of what we just learned, and then we answered some of your questions. Now, just to wrap up, I've got a question here. Is there a way to choose market settings so that we can explore tab and just looking and not just at the US market, but also SG market? Unfortunately, at the moment, based on our product specialist answer right now, he said, unfortunately, no, but it is a good suggestion. So we're working on it. We're always working on new updates for you. But this is a chance, right? Webinars like this for us to connect and find out what you're looking for and how else we can improve the product and take your suggestions. Now, I know earlier we had an email tab for you, so that is quite important. We'll share it shortly after again, but these are the emails where you can really, if you have more detailed questions like that, you can submit it. And our teams are always on the ball to really answer your own inquiries and also answer anything you have for Gerald today. So this is not the end, this is just the beginning, but thank you everyone for your questions. Now to end off, Gerald, what would you say is that key takeaway as we proceed into the second half of the year?
So I think the general idea is that we still see different investment opportunities despite the uncertainty in the market. Like what we have seen in the first half of the year, despite all the concerns around higher inflation, higher interest rates, we have still seen the US market performing well. So the idea is to be able to utilize whatever tools, insights that are available to us to make the best possible investment decision. Hopefully, using today's session, I've been able to share some of these tools with you. But if you find that this is only just the beginning, there's still a lot more to be learning, do continue to follow us, join our subsequent webinars, where we hope to be able to share more of these insights with everyone here.
Perfect. Now that was CEO and founder Gerald Wong, everyone. Thank you so much, Gerald, for joining us today. Looking forward to the next one. Okay, to the audience, remember, here's the email that I mentioned before. You can still contact us. This is not the end. It's only the beginning of such shows where we go through the actual application, because I know you guys love that. You love to see how you can apply the knowledge that you really gain from our experts like Gerald today. So remember, you can drop us anything related to these two emails, if it's product related or if it's marketing opportunities, anything you like to collab on, drop us an email right here. And we cannot wait for the future shows. So if you want to watch the replay of this, remember, it's really about education, right? So whatever you learned today, it is not a recommendation. It's all purely for educational purposes to help you in your own financial journey. But of course, remember that if you want to watch the replay and see what else you can learn or anything you missed out, you can scan the QR code here to follow our socials and also keep track of the latest shows we have for you. And if you're free tomorrow, join us, kicking off the first online show for MooFest 2023. Very, very exciting. We've got a show right here. Here are all the details. If you want to join in, you can join in via the Moomoo app, YouTube, or Facebook. And if you're based in Singapore, traveling here anytime soon, we would love you to attend our flagship event of the year. I'm so excited to share this with you because it's happening very soon. Do join us by scanning the QR code if you'd like to sign up for this big event. It's all about the community here, so you can really see us face to face. We've got a main stage event, we've got side stages, so we've got many interactive elements for you. So join us for the MooFest. You'll definitely not want to miss it. Once again, it was a pleasure having everyone with us. In the meantime, it's almost midweek, so enjoy the rest of your evening and the rest of the week. Once again, you're with me, Olivia Higgins, and wish you a profitable day.